welcome to Hilltop Wealth Advisors Economic and Market Update for the third quarter of 2024. I'm Chris Hostetler here today with David Wise. David, there's been a lot going on, so
Yes.
why don't you catch us up?
Absolutely. Over the last year and a half, bad economic news has actually translated into good news for the markets because it's given investors the hope that the Federal Reserve would finally make that first rate cut.
Yeah.
Now that rate cuts are largely expected, we may be seeing some rotation towards bad economic news equals bad market news. So we're watching that. We've seen some significant price drops recently, and that's really come at the hands of headlines showing maybe a softening economy.
Yeah.
There are some concerns that the Federal Reserve may have kept interest rates too high for too long, and this has some people wondering whether we're going to see a recession in the next 6 to 12 months. Inflation hasn't moved downward in a straight line, but the good news is it has fallen to just under 3%, which could allow the Federal Reserve to finally make that first rate cut. And we look at this performance chart going back the last year to date and beyond, you see the high disparity between the largest tech stocks and the rest of the stock market. Those Magnificent Seven, the NVIDIA, Google, Apple, Microsoft, you can see with the green line on the left far exceeds the blue line, the rest of the market. And we could see that continue, but earnings are starting to broaden really across the board.
That's right.
And so the rest of those stocks in the S&P 500 have a good opportunity to potentially catch up. And that's the hope as we are pretty diversified overall.
Yeah.
And I think something also important to note is that those tech stocks represent roughly 40% of the index overall capitalization. That's historically high, and those valuations are pretty high as well. Of course, there's still possibility those tech stocks could do pretty well, especially given some AI recent development, how they actually use the AI itself within their companies.
Yeah.
But overall, we think that a broad rally is more likely and potential down the road. As we look at the U.S. dollar, it remains strong, but we could see some other currencies catch up, and that could create a tailwind for those foreign stocks. We don't see that necessarily happening soon, though, so keeping an eye on that. And the good news on the fixed income side of the portfolio is bonds are starting to rebound. Most recently, we've seen the Fed projections for interest rates start to converge with market expectations.
Right.
That should provide some stability. And meanwhile, bond yields are super attractive, really looking back the last 10, 15 years. And they are providing the boring side of our portfolio some opportunity. And there's one negative that we really want to stress. It's the labor market. We saw that softening in July, unemployment at 4.3%. And anecdotally, we've noticed that a number of our clients are facing layoffs the last few months. And we haven't seen that in many years. And lastly, I'll mention consumer spending. It's really been the driving force to keep our economy humming. And that's going to be super important as we move in the rest of the year, especially as higher unemployment numbers have started to come in.
Yeah, so let's talk outlook. And there are some risks and opportunities. Interest rates, we would say, create some opportunity. With inflation lower and unemployment rising, the Fed seems likely to begin cutting rates in September. This is largely priced in, but it could still boost the stock and bond markets,
Yeah.
and especially if we start to get hints that the Fed will cut rates several times.
Yeah.
The election, believe it or not, is an opportunity. Just recently, we've seen a credible assassination attempt on one candidate.
Yeah.
We've seen another candidate pushed out of the race over questions of mental fitness. This is all within just 4 months of election
It's
day.
crazy.
And there's still a short time remaining until election day, so we probably have a few more surprises in store.
Yeah.
At Hilltop, we don't tend to get too worked up over politics as investment advisors. You'll
Yep.
see here that the markets have pretty much done their thing regardless of who's in the White House. We'd never say that public policy doesn't matter, but we have seen that investments will adapt to whatever political situation we find ourselves in. And it seems pretty clear that the markets don't dislike either party,
Yep.
but the markets do struggle with uncertainty, right?
Agreed. Yeah.
So we expect that there is likely some investment cash waiting on the sidelines right now and continuing to wait as long as the political and regulatory environment remains pretty murky.
Yep.
However, this can be potential energy that is converted to kinetic energy on and after election day.
Yep.
U.S. market prices are probably more risk than opportunity right now. Market expectations are currently pretty high, making stock prices vulnerable to disappointment. If we
Yeah.
get some bad news, that could cause a correction.
Yeah, just like we saw.
Just like we've seen recently, yeah. The international economy is probably a good combination of risk and opportunity. The developed markets like Japan and Europe are showing signs of growth, with employment looking pretty good in those places. The emerging markets are a mixed bag. Notably, China has slowed down significantly over the last year. India is growing and continuing to go strong.
Yeah.
So, Dave, let's talk about positioning.
Yeah, sometimes the best measure is to hold the line, and that's what we're doing this quarter. We like our allocation at this point in time, but we are rebalancing towards those target percentages within the allocation. And really, we've seen a nice run up, so we're taking profits. It's always good to take profits ever so often, and now we feel like it's a great time as we kind of lean into the election. And we do like to keep our allocation pretty close to the market capitalization overall, but there are some overweights, particularly U.S. to international stocks, mid-sized and small-sized companies to their larger counterparts.
Right.
On the alternative space, we're prioritizing income and a defensive approach. And we're currently using a healthcare fund and a technology sector fund that is designed to generate income to temper some of that potential
right.
volatility. And some wisdom for the ages. I think TLC says this: don't go chasing waterfalls. The returns in the Magnificent Seven can create temptation to buy those winners. They've done great, but now they're trading at all-time highs. And so it might not be a good opportunity. So we encourage you to stay diversified.
That's right. Thank you all for watching. We hope you've enjoyed this and learned something new. And if you're not already working with Hilltop, please know that we'd love to help you too. So go to hilltopwealthadvisors.com to learn more or get started. If you're already a Hilltop client, thank you. We truly appreciate the relationship.
Yes.
Please don't keep us a secret. Feel free to share this video and share us with your friends and family. Thank you for watching.
Thank you.